Okay, peeps. So today we're going to be talking about the FEPI and AIPI dividends as well as XDTE and QDTE. So with that being said, let's get it. All right. So first thing we're going to go over here is the dividend distribution. So we're actually going to go into this a little bit more in depth. We did talk about this in the previous video, but again, the market is getting ready to experience the first rate cut here soon. And so I think it's important to talk about this at this point. So you guys can see that FEPI has not been paying quite as much as it recently did. It seems like every time the market goes down, that this thing pays less, and every time the market goes up, it pays more. I'll actually let me see if I can actually pull up a chart comparison here, and I'll show you guys what I mean. So on the left chart, I'm actually going to go with FEPI. So we'll go with FEPI on the left chart, and then on the right chart, we'll take a look at the NQ specifically, and this could also apply to AIPI because again, AIPI and FEPI are mostly heavily tech weighted. So there could be some outliers in there, but it's mostly just tech companies. Okay, so we'll take a look at the price here on the charts. And these are relatively new funds, so there's not really going to be a lot of history here on them. You guys can see that FEPI basically just came out pretty much about 10 months ago, so not really a whole lot to go on here. So scrolling out just a little bit on the NASDAQ. Again, this is the futures version. It's not the actual NASDAQ, but it's pretty much what it does is just mirror the NASDAQ index. So you guys can see right from the inception date of FEPI, we had a little dip and then we ripped, right? And then we had a little dip and we ripped, and you guys can see that it kind of just does mirror the overall price action of it. So as the NASDAQ goes down, FEPI goes down. As the NASDAQ goes up, FEPI goes up. And then we had this really insane flash crash, and FEPI really tanked pretty hard, and now it's gone back up. And you guys can see we're having a little tiny pullback right here, and FEPI, of course, is going back down as well. But the thing I wanted to point out is actually not that, because we know that the two pretty much are moving in tandem. What I want to point out here is the actual pullbacks in correlation with the dividend payments. So we saw a pullback here in March, April on FEPI, also a pullback on the NASDAQ in March, April of this year. And what happened? So February going into March was pretty good. As you guys can see in the stock market, February going into March was pretty good, right? But as soon as we got that sell-off, unfortunately, we did get a reduction in the dividend. Also going back over here over the most recent rally, so we got this big rally in June, July, and then what happened going from July into August, we got a nice little sell-off here. And you guys can see in both July and August, unfortunately, there was a small reduction in the dividend, although it wasn't that much. So I got to admit, it was relatively small difference, which is nice. That tells me one of two things. Number one, that FEPI has the ability to recover just as strongly with the markets when the markets go back up. And number two, the dividend doesn't get absolutely crushed as a result of, fingers crossed, knock on wood, it doesn't get absolutely crushed as a result of the markets plummeting. So, of course, this isn't really a big, this one right here was a big drop, but this little tiny pullback we're seeing right now, it's not really all that much of a sell-off, honestly, as of right now. Okay, so just gotta wait for this to reload. I don't know why this is taking so long. Sorry about that, y'all. Okay, that was really, really slow. I don't know what's going on here. I think maybe the internet's being kind of slow. So anyways, yeah, the dividend payment for this month is $1.08, so that's great. We already talked about the dividend payments in full, but I just want to go over it again and kind of lay in a little bit more detail as to how the dividend payments seem to react to the markets going up or down. It seems like when they go up, the dividend goes up, and when the markets go down, the dividends go down. Although the spread between the two dividend payments on AIPI was relatively small, $1.46 on that one. QDTE, this one's a little bit different. I don't think this one, the dividends are kind of mostly random, it seems. I mean, maybe they pull back when the market pulls back. I'm not entirely sure about that one. Uh, I'm not really too concerned about it. I mean, even at 30 cents a dividend, it's still exceptionally good as far as I'm concerned for a dividend payout. So you guys can see that most of the dividends that they paid out have actually been quite a bit lower than recent times. So roughly about that 20 to 30 cent range on the NASDAQ. So all of these payouts right here, in my opinion, was just icing on the cake. So 31 cents for the QDTE for this week. So that averages out to about $1.25 per share per month. And if I'm not mistaken, I think I've been looking up on this, but I believe that Round Hill's also supposed to have one come out for the Russell 2000 called RDTE, if I'm not mistaken. So you guys will have to let me know about that one. I'm not sure if I'm going to buy that one. I think that we'd probably just rather have the S&P and the NASDAQ version because the Russell's a little bit more speculative, but to each their own. So XDTE, 26 cents. That does average out to just, rough 26 cents, not exact numbers, but roughly about $1.04 per share per month. So going down here, you guys can see the different share counts that we have. So we have 100.1 shares of FEPI. We just wanted to get to that 100 because for these higher yielding ones, we want to get at least $100 a month. So 100 shares, the dividend's usually about $1.20. So that's well over $100 a month. AIPI, same thing, although we probably didn't need nearly as many shares of this. But again, it's an AI ETF. In my opinion, we're very, very early in the stages of AI in society, and the pricing in of that within the markets. So I think likely there is much, much more upside to come and much more growth with AI to come into the future. QDTE, of course, we have the 100 shares here, and XDTE, we also have not quite 100 shares, but we're getting up there eventually. So we'll just go over each one of these real quick. So FEPI and AIPI, unfortunately, are down. Haven't bought any FEPI, but did buy some AIPI. So this one's down, unfortunately, roughly about 11.2%. But, markets have been a little bit shaky lately because of the flash crash. And then you have like the overseas conflicts, and you have the Fed talking about cutting rates and NVIDIA earnings, and it's just kind of a mess. So if we wanted to, we could just buy more on the dip. But I mean, overall, this thing has held pretty well. It's only down 3.4% since inception. And considering how much volatility has been going on in the markets lately and the kind of craziness we've been seeing, I would say that this thing has actually held up pretty well. I mean, with roughly about a 25% yield, I would say that the price has held up nicely considering all the craziness that's going on. AIPI also not down that much from inception, so only 4.33%. We did buy quite a bit on the dip, but of course it dipped more. But like I told you all before, we keep plenty of capital on the side for situations just like this. So that way we're never really running out of money to buy the dip. We always have something on the side to be able to buy the dip no matter how much it dips. So, sometimes for us it makes sense to buy the dip. Sometimes it just makes sense to hold. It depends on the situation. So QDTE down a little bit less than 10% here, but again, that's not that bad. So QDTE, unfortunately, it looks like it was opened up just right before this dump that we saw back here in the April timeframe earlier this year. So it didn't open at a bottom. It kind of looks like it opened up near the top. So this thing does have to recover quite a bit to get back up to the basically inception open there at 4602. And XDTE has held up a little bit more, again, because the S&P is not as heavily weighted with tech as the NASDAQ is. So when tech moves, it's felt more heavily in the NASDAQ than it is the S&P. So this one with the XDTE has held up actually quite nicely in comparison to the QDTE. So NASDAQ is experiencing a lot more volatility as of recently than the S&P 500. So currently only down 1.62%, which again is not bad. XDTE, again, this did open at what appears to be around pretty close to a market top on the S&P 500. So, it's actually up a little bit. It's up 0.27% since its inception, and this thing has been around for about 5 months. During that time frame, it's gone up and down, but the whole point of this is it has shown that it does dump powerfully with the markets when the markets move down, but it also pumps powerfully when the markets go up. So there is potential for recovery on these ETFs, which is what I love about it. And I also love the fact that it does pay some pretty nice dividends. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.